Hello guys, you're welcome to Coinspace with Austin. If you've not subscribed to this channel, kindly smash the like and the subscribe button. It does help me a lot. Today we're going to be talking about the Bollinger Band Indicator. Now the Bollinger Band Indicator, it is a very useful indicator in trading. Now it's an indicator that works with the principle of deviation. Now if you check, it has a lower part and the upper part and a line in between. Now this line in between is your regular moving average, and this upper part here is the upper part of the Bollinger band, and the lower part is the lower band. Now how does this work? Now this basically works with the principle of demand and supply. Normally when you have your demand go up, at some point it's going to come down. When you have your demand come down, at some point it's going to go up. Now that is basically what you're seeing here right now. Now the idea majorly is actually to look at the bottom part of the Bollinger Band and buy when the market is down, just like what has been happening here in the chart so far. Now let's take this position as a critical case study. Now if you check on the lower part of the band, if the market comes down and hits this point, it gets past this band, it means the market has been oversold. Yes, it's been oversold, and what is going to follow, it's a buy, which is basically what is happening here right now. And if you look through all the charts, you're going to see a similar thing is happening right on this part. When it's oversold, it's bought up, but when it's in between, the chances are you're going to be very careful of trading because you might make the wrong decision. So you have to be very careful. Most traders enter their trade when the market is actually on the upper part of the Bollinger Band. Now when the trade is actually on the upper part of this Bollinger Band, it is quite dicey and you can actually lose all your money if you're not very careful, because it is much more safer to go into the market when the chart and the trade falls down to the bottom part of the Bollinger Band, so that you can see when it's actually oversold. When it's oversold, then you'll be looking at buying into the market, because when it's oversold, investors are definitely going to rush into the market to buy. But most traders prepare to go into the market when the market is actually on the upper part of the Bollinger Band, which is very much dicey, like I said. But if you're trading on it, you have to be very much careful. Like, check what happened at this point. At this point here, the market was market was oversold, was overbought rather. It was overbought, and then investors kept going in and kept going in and kept buying. But at some point, when it is overbought, the market is going to crash. Now, these are ways you can know how the market is going to move with the Bollinger Band. Now, if you find this useful, kindly smash the like and the subscribe button. I'll leave a comment in the comment section if you have a question. I'm definitely going to answer it. Thank you for sticking around. I am Austin, and this is Coinspace.